Okay, well, look, let's get started. Good afternoon, everyone. It's Tuesday, the 4th of April. It's 1 p.m. on the Eastern Time, which is 6 p.m. here in the UK. I have to do the legal bit, which says that this webinar is for information education only, and nothing said, not said, or implied is a solicitation to buy, sell, trade, not trade in any vehicle whatsoever. Also, I'm not a registered financial advisor. Right, now we've got that out the way, that's the legal stuff. Just one word of warning from my point of view. This week has got quite a few numbers coming out. We've got the FOMC minutes tomorrow. We've also got non-farm payrolls on Friday. And both of those are quite likely, I think, to give a little bit of volatility to the markets. Great. Well, look, thank you very much indeed for taking the time to join me. I don't want to go on for too long, so what I'm going to do is briefly introduce myself, and then we're going to go and look at a few charts, gold and silver, indices, the euro, and so forth. And what I'm going to do is try and show how the methodology that I use can make them readable and accessible to just about anyone, whether you're an expert, whether you're a beginner. And then finally, I'm going to talk briefly about my new website, which is now up and running. What I'm going to do is leave questions to the end, if that's all right, because I can just about watch one screen at a time and keep talking. But looking at questions coming in all the time at the same time, it'll just end up in a mess. So I'm going to leave questions to the end, if that's all right. Right, a few words about me. For those of you that don't already know me, my name is Ben Drage, and as you can probably tell from my accent, I'm a Brit, and I'm based in the UK. A little bit on my background: I read law at Oxford University and started in 1982 in the City of London, and I was working in the money market, and I was there until 1998, working for various boutique firms looking at the nascent interest rate swap market. 98, I decided to leave in order to concentrate on my personal trading, and that's basically what I've been doing since then. Right, got all that out of the way. Let's go and have a look at some charts, which I guess is what you're really here for, and see if I can show you what I mean when I talk about decoding the markets. The first thing and the most important thing to me is to have really clear, concise, easy to read charts. No MACD, no RSI, no momentum indicators, no Bollinger Bands, and absolutely no way any Elliott wave. What I'm looking at purely and simply is price, because that is the sole and best determinant of what is going to actually happen. Right, the chart you're looking at is the DX, the dollar index, on a daily basis, and I guess that it makes sense to most people. You're probably sick and tired of looking at it by this time, but let me just talk about it a little bit here. You can probably see where the support is, you can probably see where resistance is. Support, as you can see, all the way along the lower parallel here. Resistance, you can see the green sliding parallel there, you can see the resistances and so forth. And just something we're noticing at the moment today, just putting in currently talking about to the members, a little bit of support across from that low, from those lows there, move across, and you can see the daily price just held underneath that line for a few days there, 3 or 4 days under that. That's something we're keeping a little bit of an eye on. Anyway, as I was saying, look, you can tell where the support is, you can tell where the resistance is. It's nice and easy. You can trade this chart with a bit of conviction. What I'm doing now is clearing it. Okay, and the reason I'm doing that is I'm just trying to show the difference between putting a chart in a frame where you can see where the support is, you can see where the resistance is, and just looking at it completely blind like this. There are 2 major events on here. One is Brexit, that was the low there, and the second is Mr. Trump there. Now, without using a pitchfork, how would you know that these were about to send prices moving to the upside pretty quickly? Let me come back here and try and undo the chart, put back my little pitchfork, and all of a sudden you can see low there and a low there. Both of them caught absolutely perfectly by the fork. And what I mean is that as soon as I put that back, you start to see the pattern again. Get rid of it, the pattern goes. And what I'll do actually, just show you how we draw it. You go from a low back here, up to a high, back down to a low, and all of a sudden you've got your pitchfork in play. And all this support along this lower parallel becomes nicely visible, and it becomes, you find the reason, you understand why it should be there. And again, all I'm going to do is I'm just going to take a little parallel off these lows across here, Just draw that green line in, and again you can see why for 4 days we've pushed up, and that's the line we've been holding at. Okay, great. The holy grail of trading or investing is to try and find likely areas of support and resistance, and when you've done that you can start to trade with confidence. And that's really why we look at charts. We don't look at charts for any other reason than to try and find the patterns in them. Our brains are wired to respond to patterns. We're pattern-seeking mammals. Therefore, when you see a pattern in a chart, you feel comfortable with it. And when you feel comfortable with it, you can then trade it. Now, just one other thing before I go on and look at another chart. You must be sick and tired of this at the moment. Actually, why don't we go on? We'll go and have a look at the euro on a daily basis. The other thing that we do by using this methodology is we're using lines, support, resistance that other people just don't see. You know, they're all looking at horizontals, they're all looking at fibs, they're looking at all this kind of rubbish. We're looking not on the horizontal at all. We're constantly looking in the angle of the fork, the angle of the pitchfork, the angle of ascent, the angle of descent, and people just are not looking at that. That gives us a huge advantage. That gives us a huge edge over the rest of the market, because we could be buying or selling an instrument a long way from a horizontal, and they just wouldn't have a clue why. Anyway, right, enough about that. Let's try and just show you again what I mean. This is the euro again on a daily, going back to early 2015 here. And what I guess most people would look to do if they're starting to chart this is they'd start taking horizontals. They'd sort of go across from here and say, okay, you know, horizontal, resistance, 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 quite nice. I'm just going to copy that. I'm going to put that down here, and support, support. Oh, yeah, but we're nearly at support. That's fine. But we can do an awful lot better than that. We can do a lot more. We can get much, much, much more subtlety into it. So what I'm going to do is I'm going to try and go back in time, okay, and just try and show you the kind of thing that we'd be looking at here. This is taking us back to February 2016, I think it is. What I've got is I've got a low, got a high up here, got a low down there, and I just draw the pitchfork in to try and frame what's going on, just to try and frame how we're seeing the market. And maybe all of a sudden you can see what I'm talking about here. You can see the way that we've got a touch down here on the lower parallel. You can see we've moved, we hit a high there, we came back down, moved up to another high. Some of you will already be saying, well, look, you know, that's pretty much in the line, isn't it? If we take a line across there, you can see that high and that high are in the same line. They're in the angle of the fork. Yeah, absolutely brilliant. We come down here, we come down, we get a very, very close, an exact bounce on the lower parallel, and we just watch what's happening. Now this to me is interesting. You've got this line, this lower parallel that we've seen as support. You can see a really big strong bar off that. I like big strong bars. That tells me that there's something happening off a line. Okay, and the fact that this one went all the way from the lower parallel up to the quartile means that this line is pretty important. So what do we see here? We've got support coming in at the lower parallel. We break through it, and all of a sudden that parallel becomes resistance. So even though we're falling out of the fork, you can still see that the angle that we're looking at, the way that this fork is running, is still giving us clues about what's happening. Let me go on a little bit. As you can see, price comes up, tries to get back into the fork again here, doesn't quite make it, and then we start falling away. Okay, when we start falling away, when we see a line of support broken like this and price moving to the downside, what we do is we go and have a look at what we can see in the other direction. So I'm going to take another fork. I'm going to go from this high back here. I'm going to go down to this spike low that was on the lower parallel there. And I'm going to go up to that spike high there. Okay, I'm going to color that red because I like my downforks to be red. I'm just going to change this, just blank that out a bit so it doesn't take up too much attention. And look what we've got here. We've now got a fork to the downside. All of a sudden, we start picking up support at the median line. Okay, you can see all this support in the line here. We move up from there. Where do we find resistance? You've got the lower parallel of the fork, of the blue fork that we were talking about. You've also got the upper parallel of the red fork. And price starts moving along and along. And here we go. Again, you've had the spike. That's the spike that we got from Mr. Trump. That went screaming up above and came down. And that is literally the only time we've moved out of the fork. We come back down here, we start finding support along the median line. You remember, we saw median line here. We're starting to see it again back here and there. And that's where we are now. That's where we are today on the euro. All I've done is just draw two simple pitchforks, and hopefully what I've done is really describe to you, just put in a frame exactly what the moves that we're seeing. I'm giving you a line of likely support, I'm giving you a line of likely resistance. If the line of support gives way, I'm giving you the next line of support and resistance. And what we're doing is we're trying to we're trying to adapt our forks, our movements, the lines that we're showing, the descriptions that we're giving to them as price does continue to move. But all through this, you'll notice, look at the red upper parallel. Really nice resistance along there. Really nice resistance. Yeah, down we come. Where are we at the moment? Well, we're looking to see what happens at the quartile. If we look back at the quartile, you can see there's a little bit of action back here. Bit of resistance just underneath it there. Bit of resistance there. We've pushed up and we've come back. I'm looking at three places in terms of support. I'm going to look at this quartile here. If we move lower, I'm going to look down here to the median line. And what I'm also going to do, I'm just going to be a little tricky because I've been watching this for a little while. I'm going to draw a sliding parallel from that low. You can see we're getting support, we're getting support, we're getting a bit of resistance, although with a spike up and through it, and through here. So three places I'm looking for support: quartile, green sliding parallel, median line. I hope that makes sense to people. Let me go and show you this again. I said we go and have a look at some of the indices. Let's go and have a look at the Nasdaq. Where are we, Nasdaq? Here you go, Nasdaq daily. I'm not going to go through all that which I did beforehand. Okay, don't need to do that. But I just wanted to point out to you again how much easier the pitchfork makes, just to put the trends into a bit of perspective. Okay, here we've got pitchfork going back to 2014. All we've done is draw a low, a high, a low, and we just start watching what's going on. You'll notice down here we're picking up all the support. We dipped up very briefly beneath that, literally for 2 or 3 days beneath that. That was with Brexit. Then find support on there again. Up we come again. You can see what's happening. I mean, anybody who's had any experience in the market can see this line of resistance across here. You can see the lines of support, line of resistance becoming support across here. Even when we spiked through it with Mr. Trump down in November, where did we find our support? Bang on this next line here. Okay, what we are seeing is we are seeing the angle in which price is moving. Once we find the angle in which price is moving, you can then start to look for your supports and resistances. Again, without going through all the detail too much, here we go. We start moving up. We have this line of resistance across here, which we've been looking at for quite some time. We spent 5 or 6 days, actually probably a bit more than that, 7 or 8 days, resistance there. Then we move above it, come back down, test, and then we move to the upside. Where do we go? We move up to the upper parallel of the fork. And that is as far as we've gone at the moment. We're still looking for to see continued resistance at 54.60 or so. If price starts moving to the downside, I've just drawn a line across here from these lows, just catching these lows, more or less a couple of ticks away, maybe, but it is it's a daily chart, down at about 55.36. And we just use that framework. Again, that framework is what I'm going to call it, to show us what is going on. Again, what I'm just going to do is I'm just going to get rid of this, just make it disappear. Okay, yes, you've got all these lines on here as well. But again, putting that back in place, it just tells you what it defines the price. It shows the price. It puts it in some kind of context. Right, next let's go and have a look at the ES. And again, I'm going to do the same thing again. This is the ES on a daily basis. Again, you can see what's happening here. I mean, I've no idea how most people would probably chart this. What would you do? Draw a horizontal across there? Say, bullish above this line, bearish beneath it or something? I don't know. You can draw another one across the lows there and maybe double that and say, okay, we've doubled. We're up to about there. Okay, fine, that's great. If you want to get a little bit more information about what's going on though, again, we're going to look at a pitchfork. Let me draw it in from you again. From this low down here, we go up to the high, come down to the low again, and all of a sudden, I think, or I hope, it starts to make sense to people. You can see that what we've done by just drawing these simple lines, we've just categorized what is happening. We're showing that there is a line of resistance that's constant going back into, when is that, 2015, I guess it is, going back into 2015, all the way through there, resistance across here, resistance there. When price moved up again, bang, we hit that to the T. Okay, since then price has fallen off a bit. What are we looking at now? We're looking at the support. You can see the support along the quartile, not absolutely perfect, but reasonably tight there. Here it was resistance again, then we moved above it, it started becoming support, and that's what we've been looking at. Price declined from this high. Where did it decline to? The quartile. So what we're looking at the moment in terms of the daily price is we're looking at resistance up here at 24.30. You can see if price moved up, that's where we'd anticipate resistance, actually 24.35, pardon me. If price moves to the downside, the first place we're going to look for support is here at the quartile, 23.30. Okay, now I'm not saying that those prices are going to continuously work forever. Of course they won't. You know, at some point these will change. If price starts to move to the downside, what I'm then going to do is I'm going to look to see if what happened back here happens again, and this line, which was support, starts to become resistance. If that is the case, that means that price is going to continue. If this line becomes resistance here, price is now going to continue down to the downside. Right, that is a very quick look. I've looked at daily charts. What I'm going to do now, somebody asked me if I would do, is go and have a look at the ES, the 60-minute chart, and just try and explain this in a little bit more depth. This is basically what we've been looking at for the first few days. Initially, we were looking at the red fork here. We were looking at the downtrend that we had. You can see that the upper parallel of the fork found pretty precisely. I mean, what is that? The upper parallel is at 23.77. The high of the day is 23.78.5. I mean, that is, I think, pretty close, considering that we then had a fall down to 23.30. So, you know, we followed what was going on. We had the upper parallel of the fork here. We saw the fall. Instead of picking up support along this quartile here, we dipped all the way through it. We moved all the way down. We had found a sliding parallel off that low there, okay, which picked up support here. When we recovered a little bit, if you look, we only moved up as high as the red quartile. Red quartile had previously been support, then it becomes resistance. Down we go again. Where do we find support? Again along this green sliding parallel in the angle of the red fork. When we started seeing price moving to the upside once more, we were looking at the upper parallel of the red fork in terms of resistance, and lo and behold, you know, that's what we hit before we fell down a little bit. The fact we didn't fall very far made us think, well, okay, we're strengthening in terms of the red fork. You know, we're beginning to push up. Instead of our support being down here at the sliding parallel, our support is now up here at the median line, and it's pushing higher and higher. So what I did was I drew the blue fork in, and very, very quickly we found that we started to have a little bit of action in the line of the fork. If you just look back along this green sliding parallel, you can see a bit of resistance there, turned into support, and we pushed up very, very strongly. We then came down a little bit, and well, you know, I don't need to go through this in precisely, but you can just see how accurate a forecast on what was happening was. The highest point that we've got on the recovery was the upper parallel of this fork, and this fork was drawn off the basis of these bars here, of these moves here. So we drew that. That's the highest. Since then, we've been drifting. We've been moving sideways. Having hit the highs, we came back down. This sliding parallel has worked as support very nicely once, twice, 3 times there. Down we went again, and look here, the support. And this is what I think I've posted into Twitter a few times. You can see the support. Whoops, moved the wrong thing. Let's move that arrow. There you go. Support here, support here, support here. Very, very precise. When price moves down through it and comes back up, that's where we find resistance. So effectively, we are not as strong in the terms of the blue fork as we previously were. And that's important because it tells us that we may be moving further to the downside. Just one other thing I'd like to point out, this green sliding parallel that we originally based the fork off, we didn't get rid of it. We hadn't finished its work yet. When price fell through here, where did it come down to? Yeah, we had a spike through to the quartile, but look, support across there, moved back up, found that resistance, back down, and this is the line of support once more. Now, if you didn't have these lines, if you were looking at horizontals, you really wouldn't be getting anywhere. Let me just draw in some horizontals. I'm going to do them in a fairly heavy color. There you go, so you can see them. Horizontal off those highs. Okay, off that low, we haven't come anywhere near it. Off that low, we haven't come anywhere near it. Off that low, we haven't come anywhere near it. Off that low, you see, it's just not working. It's just not working as a horizontal. If we get rid of all of those, you can see the pattern. You can see the framework of how price is moving far better. Okay, I hope I'm making that that clear to you. And what I'm really trying to point out is whether you're very new to trading or investing, whether you're a seasoned professional, when you see the pattern in a chart, and then when you can understand what is happening, you can then trade that chart with much more confidence. And as I said earlier, we're using lines of support and resistance that 95%, maybe 99% of other traders are just not even aware of. And these lines are ones we're using lines that we can trust because we've previously seen them working. For example, this green sliding parallel down here, once we'd seen this action here, we were looking for price to come back down to this kind of level, 23.43. It dipped a little bit beneath it, 23.43, $3 beneath it, but then recovered. And when it came down again, once more, that line is what it hit. It didn't come down to a horizontal with this. It didn't come down to 23.40. It came to 23.44.96, which is precisely where we were anticipating it would work. Somebody I just saw out of the corner of my eye said, what do I expect now? Well, let me put it just a slightly other way. What I'm going to do is I'm going to continue to watch the 60-minute chart. I'm going to watch to see if resistance continues along this green sliding parallel. Okay, this is my channel. I'm going to look if support continues along this sliding parallel. Now, I cannot tell you which way it's going to move. I really can't. I don't know. And anyone that says it's going to do this, it's going to do that because of Elliott wave or some other chicken entrails that they use, I have got no interest in. I can't tell you which way it's going to move. What I will tell you though is that if we move up to this line and we find resistance, then this channel is going to continue. If we move through this line, if we go above this line and it then becomes support, you'll find resistance becoming support again, then price is going to continue to move up. And if that happens, I'm going to get rid of these resistances, these sliding these arrows there. Let me get rid of that. Let me get rid of that. Let me get rid of that. If that becomes support, I'm going to look at support there, and the next place I'm going to look at resistance would be this line up here. Okay, because that has worked in the past, and therefore that is what I'm looking to work in future. I hope that's clear. I hope I'm making sense to people. Anyway, as I'm saying, just because we're looking at things differently, it's giving us a huge advantage over other traders, over other people. Right, what are we going to do now? Let's go and have a look at gold and silver. Before we do that, I'm just going to have a slurp of water, so just bear with me one tick. Okay, back with you. Right, gold and silver. I guess a number of people here have seen the chart I've posted into Twitter quite often, this one. A number of people have said, can I just talk about this a little bit more? Well, look, very simply, I'm just going to do same old trick again. Let's just get rid of the fork, okay? And then put it back in and just say, look, it's so much easier. All we're doing, we're just putting a little framework. It's like a beautiful picture. We're just putting a nice framework around it so we can see exactly what's going on in between it. What happened is we were watching gold. It topped out at about 1380 late summer, started moving to the downside. We were looking at it in terms of up forks. Okay, I won't go through all that now because it's not hugely relevant. But once we start seeing some lower highs, and what I mean is we in terms of horizontals, 1378 is the high up there, 1374 there. We're starting to move to the downside. We start looking to see if we are finding a new line of support or resistance. Okay, instead of looking to the upside, we start looking to the downside, and very quickly we found this line, this upper parallel. A little bit messy up there, as you can see, but then we start getting some really nice resistance along that. We push down. Where do we push down to? The quartile. You can see a bit messy again there, but pretty precise there. We move up again, and also once more, let me just go in a bit tighter. You can see this bar here is a really, really strong bar. Okay, strong bar to the upside, stopping at that line tells us that really is something going on. So we start making use of that. We start paying more attention to what's going on in the slope of the red fork, and we just watch it move on and on. Again, here we hit the resistance. We move down. When we move down, what are we going to look at in terms of support? Well, the first places we can look is the quartile. We move through that. Where's the next place? Very obviously, it's the median line. We get a bounce off that, and we start pushing to the upside. Okay. Again, we look to see if there's any resistance at the quartile. No, we move above it. It all gets choppy here because this is the election. Okay, we spike above the upper parallel and then move strongly to the downside here. Having moved through the quartile, we're going to look to see if the median line here holds us as support. In fact, we fall underneath it, and the interesting thing here is that support turns to resistance. And if you remember what I was talking about on the EU chart, on the ES chart, the 60-minute chart, once you see support turning resistance, you can reckon that price is going to move further to the downside. So let me just get rid of those arrows. Again, the resistance here, price moved to the downside, and where did it hit a low? To the T on that lower parallel, and that was the lowest point we hit, and then we started moving to the upside. Again, let me just run through this quickly because there are a couple of things I want to show beyond this. We start moving to the upside. We don't get a really precise reaction at the median line here, fall away a little bit, and then push to the upside once more. You can see this quartile comes back into play again. Okay, the support and resistance we had back there, just a little bit of resistance there, then we push through it. But this line starts to come into play because we saw resistance at this level, just above the quartile. So we drew a line across there. What happens? We run up, tag that, and we fall all the way back. So when we came back up again, where have we been looking at for resistance? We've been looking along this sliding parallel, and you can see what happened. We moved up quite strongly. We spent, I mean, it's a little bit messy, yeah, but we spent 5 or 6 days underneath that line before pushing through it. And again, if we go in a little bit closer, you can see the first close that we got above that line was yesterday. Okay, and then again today we're pushing higher. We're looking to see what happens. What am I going to do now? Well, I'm just going to keep a watch on it. I'm going to see if this line of resistance, if price moves back a little bit, do we start finding support coming in along this line? Now, I've got to say, I've tried to give you a reasonably simple run through. We do tend to look at more than one fork at a time, particularly in gold, which is probably getting back into a secular uptrend. I mean, I don't want to say definitely because I don't want everyone sort of going out and spending their mortgage money on buying gold blocks, but it looks as though gold's in a bit of an uptrend. So let me just show you another chart that we're looking at. Remember this low middle of December down at 11.24 or so. Okay, let me just go and show you another chart we've been following, and this is a gold chart going to the upside. I'm not going to just go through all the details because obviously some things have got to be reserved just for members, but look, be aware of the fact that this has been running for some time, that when price came down, we were looking to see if anything happened at the lower parallel, and that middle of December, that's the low that we saw on the other chart, and we started moving up from that. What I'm actually going to do is I'm going to draw on the red fork, okay, so you can see what I'm talking about here. Whoops, just lost that line there. There we go. Put that in place. Turn that red. Okay, that's the fork we lost. Look at the lower parallel. Bang. I mean, I honestly don't know if you could get much closer than that. Okay, so we were anticipating, shall we say, that this was an area where we might pick up a bit of support. Since then, we've just been watching how things have run, again using sliding parallels. You can see that this line across here, bit of resistance, bit of support here. So when price came back down, this was the kind of level we were looking for support. We got it very, very precisely, and we've pushed to the upside. We've got a different kind of resistance here. It comes from this low, resistance there, worked again there, bit of a flush through there, and this is what we are underneath at the moment. We've had this 7 or 8 days underneath this resistance, looking to see if we can indeed just push up through that. Okay. what I try and do is try and work across markets as well, in the same way that gold and silver work together. You've got something like the euro against the DX is working in kind of a different way. This is silver on a daily. I just want to show this very briefly as well while we're talking about this. Again, I don't want to go through all the bits and pieces, but look here, middle of December. Okay, we've got the lower parallel of the fork here. The low that we got in gold in the middle of December, we pinged very precisely with silver as well. And since then, we've seen price move up. Again, a green sliding parallel just across here. Resistance, 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 and there. All this nice support here. We got resistance pushed above it, came back down, and we're now struggling to get up above that line, which I'm seeing at about 1837 at the moment, only about 4 ticks or so above where we are. But you know, the accuracy of this, that I can say, look, I want to see a close above 1837, 4 ticks on a daily chart. I don't honestly think that's something that you're going to find too often. Right, that's gold and silver on dailies. I just want to go and have a quick look at them on a slightly smaller scale, 240, because somebody asked me about this. Again, it's something that I posted into Twitter. And this is gold on a 240-minute chart. Somebody said to me, how do you know which chart works? Well, you know, quite frankly, I sit here and I draw probably 200 or 300 charts over the course of a day. I don't publish those all to the website, obviously, and I certainly don't publish them to Twitter, but I probably put out something like 50 or 60 charts, I reckon, during the course of a day into the website, into the chat rooms there. And some of those are brand new charts. The majority of those are just continuations of what we're seeing, where I'm saying to people, you know, look out for this, be aware of that, watch what happens when X, Y, or Z happens. So one of those that I came up with was this 240-minute chart, and again, it seems to capture the moves very, very well in what's happening. You can see quite early on we got all this support down at the lower parallel. What I particularly like about it, again, it's a very, very strong bar. You can see here, I really like strong bars. We move up from that. Okay, come back down. We start finding supports and resistances. Again, I'm not going to go through all the bits and pieces, but you can see resistance there, support there. We move up above it. This line of resistance becomes support. We push higher, etc., etc., etc. Where are we at the moment? Well, we dropped down a little bit a few days later, a couple of days ago. What I was looking was to see if this green sliding parallel acted as support. It didn't. We fell underneath it, and then we came up and touched it in terms of resistance. So let me just mark that in so you can see what I mean. Support became resistance. At this point, I was getting quite wary, because once support turns into resistance, that can tell you that price will move to the downside. However, what's happened was, again, you see the blue sliding parallel, again working in the line of the fork. We move up, we move above the green sliding parallel again, and start finding support. So support became resistance, and then strongly became support again. And what happened? We pushed and continued to the upside. And where do we continue to the upside to? Green sliding parallel, across there, we have that little flush above it, resistance. That's what we hit today. There we came down. What are we looking at the moment? I'm looking to see if we can pick up the support from the green sliding parallel to the median line. Can we start finding support along there? If we do find support along there, then I would anticipate that this resistance up here is going to give way and we're going to move higher. Where am I going to look for the next resistance? Sliding parallel along there. It's very, very simple. It's just adding a brick on top of another brick. It's just adding to your knowledge as you're going along. I mean, I'm not sort of standing around saying, well, you know, price is going to go to 1283.5. I've no idea. What I can say is, if we have support here now, we may have support here in future. If we have resistance here, we may have resistance there. That's all it is. Nice and simple. Very, very simple. So let me just go over and show you the 240-minute on silver as well. And I guess a lot of people have probably seen this as this is something which has been running, you know, for really quite some time, going back to December level, ever since we got the support down here just above the lower parallel. Okay, again, I'm not going to go through all the details, all the bits and pieces, but what I just want to show you is the way that we were looking at resistance at the upper parallel here. You can see this is where we got to. This resistance here, okay, that we got there, turned into support, and we were looking to see if that continued. As soon as that gave way at 1832, we started getting nervous, or we were concerned, and anyone that was involved in a long would probably have got out at that point. Okay, what happened from there? Price fell. Where did it fall to? It fell to the green sliding parallel, moved up again, then back down. fell again all the way down towards the bottom of the fork, found support here. This is a line which hadn't been used since back here, back in 2016, would you believe? Okay, but again, it did its job. And even when it gave way briefly, we fell down to the lower parallel of the fork very, very precisely, and then started moving to the upside. And once more, you had one of these really strong bars to the upside, which I like. Where does it move to? Resistance here. It then moves up. Where does it go to? And we're back up above this sliding parallel. Okay, all we're doing is we're just building information upon information. It's kind of a stair step up or down. What the thing to note, or what are we looking at the moment? We're looking to see if support continues along this green sliding parallel. Okay, we're looking to see if resistance continues along this slightly weaker blue sliding parallel, and that's all we're doing. And we'll look to see if price moves to the upside, moves to the downside. Great. Now somebody also said, could we go and have a look at the Dow? So I just want to do that. I'm probably going to be about another 5 or 10 minutes, then we'll go and have a look at a few questions, if that's okay with people. Somebody wanted to go and have a look at the DOWYM daily and just how nicely that was running. Again, this is a daily chart going back to 2014. And what I would point out here is that the angle of this chart, which principally, I've got to say, comes from these two lows that are beneath the lower parallel, principally comes from those two lows. What it did was it managed to catch the two major events of this year pretty perfectly. The first one was Brexit, where we fell to that line there. Okay, that's the line of support. And then we had the Trump election there. Now, I mean, that was a little bit off. The line is at 17,519. The low, let me just get that, is at 17,418. So we were 100 pips away, but considering the moves that we've had, I think that is pretty precise, and particularly given the way that this absolutely spiked to the upside once more. Just wanted to point out really how price has moved. We've pushed up, hit the upper parallel resistance there, and started pushing down to the downside. Okay, it's just been what are we looking at the moment? Well, we spiked above the upper parallel very quickly, came underneath it, found a bit of resistance there once more, and moved a bit to the downside. We're just looking at the moment to see if price can stay above this sliding parallel here, whether it's above it or beneath it. And in fact, what we're using is a slightly shorter time frame chart. Again, this is still a daily chart, but look, here's the this is actually working much better in terms of resistance, because you can see sliding parallel, resistance there, all the way up here, hits the resistance, and down we go. And just to look at a little bit more detail, again, we've got a line that we've drawn across here. We fell down to it, got a bit messy, it's got to be said, but at the moment we are underneath that. I'm currently looking at resistance 20,740 or so. I'm looking at support along the blue sliding parallel here from these lows at about 24.57. Beneath that, I'm looking at 21.55, which is the lower parallel of the fork. Great, that is NQ. Somebody else said, could I go and have a look at sterling on the 60, which I will do. Just let me have another slurp of water. Hang on a sec. Okay, back with you guys. Sorry about that. My throat does get a little bit raw with all the talking away. Okay, this is sterling on a 60-minute chart. Again, what we're trying to do is we're trying to frame the moves in price. Let me just get rid of the red fork key so you can see that a little bit clearer. We're trying to frame the moves in price. I don't actually mind if price moves out of the main bars of the fork. Okay, all I'm trying to do is just find the angle that it's running in, and I think the angle was pretty well shown here. I mean, you can see the resistance that we got out here along the warning line, a little bit of a flush above, but still not bad resistance. And again, in terms of support, you can see across here as well. Now, what happened is when price started falling away from the warning line, what I mean by that is this move here, instead of getting up to this level, 2610 or so, the line where all the previous resistance was, it's just that little bit lower. Okay, it's a little bit of a gap. So because price vibrates, okay, between support and resistance, when you push it a little bit lower, when price doesn't get quite as high as it did previously, you start to worry a little bit about its support. And that's precisely what happened here. Little gap to resistance there. We start falling through support and down we go. What happens is we start finding a brand new corridor that we're running in, this time underneath the median line. That's our resistance across there, with our support just underneath the lower parallel. And that's what we were watching for quite some time. Again, we've fallen from there again, and we've moved down to the warning line. Just one other thing I'd point out to you. The median line, which is the middle line here, is the median line. Everything else rotates around it. Effectively, what's happened here is we found resistance along the warning line there, mirrored by the support along the warning line here. We're equidistant still from the median line in the action that we're seeing in the fork. Okay. Right. So what did we do seeing this moving to the downside? Started looking to see what we could find. Drew from a high to a low up to a high. Changed it to red because that's what the color that I like my down forks, and all of a sudden you can start seeing that we're beginning to get a little bit of action along the line of this fork, along the upper parallel. Resistance across here, we move sideways, we hit that line of resistance, fall away, and we're going that way again. We're in a bit of a wedge here. We've got the support coming through of the blue warning line, we've got the resistance of the red upper parallel here, and this is getting tighter and tighter and tighter. So, what am I looking to do? I'm looking at the moment to see if that support continues. I'm looking to see if the red warning line, the red upper parallel resistance continues. Whichever one of those breaks is the one that I'll go with. Simple as that. Right, that is basically all I really wanted, all the ones I really wanted to show. It's a quick spin through what I hope was some fairly interesting charts. And I hope that for some of you who are more used to lagging indicators like RSI, MACD, all that kind of thing, maybe it's even been a little bit of an eye-opener how what we're actually trying to do is we're trying to project forward and actually to show where, using past supports and resistances, where we can find future likely areas of support and resistance. And that really is what Forex Analytics is all about. I'm trying to produce clear and uncluttered charts and also give out high probability, low risk entries and exits. Because once you can put one of these patterns on a chart, you can understand your chart, and in turn you can then successfully trade that chart. And because you're seeing and putting lines of support and resistances where other people don't see them, where other people don't have an idea that they might be, I think that gives us a big advantage. And let's face it, everyone needs that kind of edge. Anyway, so look, if you like what you've seen today, if you want to find out a little bit more, please go and check out the website, and that's www.Forex-Analytics.com. There are some more videos there and also a little bit more information. And if you think the methodology can maybe help you with your trading or investing, please think about giving the analysis service a try. We've got a specialized one for gold and silver, for precious metals, and also a more general one which covers the metals but also forex, commodities, indices as well. Both of the services have separate daily video analysis, and what I try and do in those is trying to highlight the moves and also the key areas to watch through the next session. And we also have chat rooms where you can post your thoughts, or I can update things during the course of the trading day. And we also have 2 live webinars per week where we try and look at the key charts and look to focus on what's happening in a little bit more detail. As I say, look, if you think it's of interest to you, please give it a go. At the moment, we've got a special offer on for new members. You can get 1 month's access to the full service for $50. And if you like what I see, and I hope you do, and I hope that then you'll stay for a little bit longer than that. But if you decide it's not for you, and you let me know within the first 2 weeks, then I'm quite happy to refund the $50 guaranteed. Okay. Great. Well, look, I hope I've given you some idea of what it is I look to do, trying to simplify the charts, trying to put the moves that we see into an understandable and therefore a tradable framework or context. While I think the methodology has got really great benefits for whether you're a trader or whether you're an investor, I appreciate that it is a little bit of a step out of the mainstream. But I really like the quote which says, if you want to have a better performance than the crowd, then you have to do things differently from the crowd. And hopefully that's what we try and succeed in doing. Right, I can see a whole load of questions out there. I'm just going to have another slurp of water, then we'll go and have a look at some of the questions, okay? Right, that didn't take long, did it? Okay, I'm just scrolling through some of these. Right, Leon has written quite a long thing saying future projection, support and resistance with forks. Leon's saying, apart from support and resistance with forks, what methodology do I use? I use forks. I use support and resistance. The only other thing I ever look at is stochastics on a daily gold chart. That is the only thing I look at. I'm not interested in volume. I'm not interested in Fibonacci. I'm not interested in moving averages. None of them. I want to see what price is doing. Support and resistance. Plenty. That's plenty enough for me. What time frames do I use and trade in? Because I spent too many years watching a dot run around on a screen, I don't like to use short date trades. I tend to use, for my own personal trading, daily and 2 40-minute charts. I will use a 60-minute chart though to find an entry, and also, you know, for some members on the site, I also put out 20-minute charts. But for me personally, I look to use longer dated ones, and I mean that, you know, that is really quite can be very useful. Let me just go over and have a look at, for example, what do we got? Euro yen weekly. That's one which has been running. No, not Euro yen. Which is it? CAD yen. No. Oh, here we go. Swiss yen. I mean, something like this, which has just been running absolutely brilliantly for years and years. Ignoring these spikes, okay, but you can see the resistance from the upper parallel here. It's at 132, comes down to 101. You've got 3,000 plus points on that. Really fantastic move that worked. Euro yen is another one that I've been looking at. Again, this is a weekly chart going back to 2000. The fork there. Price moved up. It stopped just underneath the median line of the fork. Okay. When it did that, all I did was wait a year, run a line there. Because it stopped there absolutely perfectly, we pretty well knew that what was going to happen was it was going to move from here and very likely to find support down at the lower parallel. That is at 149. It got down to 111. That's what, 3,800 points. And since then, it's been running really nicely. Since that, you've had support at the lower parallel. We pushed up. We found resistance on this line. Let me go in a bit closer on that and just show you what happened. We drew a line off this. Why that line? Because it's a massive spike. Brexit, bang, drew the line there, hit resistance there. We've fallen away from that. We were looking along this line here to see if the resistance there, there's a bit of support there, it worked. It did until this week. We've now fallen. What I'm going to look now is to see how we go when we come down to the lower parallel, which is down at about 115 or so, 115.12. Okay, that is the sort of trading I by far prefer than trying to look at something very quickly on you know, a screen moving up and down. What I would say is the methodology does work, whether you're looking at a tick chart, whether you're looking at a 1 minute, whether you're looking at 5 minute, whether you're looking at 20 minutes. And obviously, you know, if you like running stochastics, if you like running RSI, if you like running moving averages, whatever, you can do that. You know, nobody's stopping you doing that. But what I'm you know, pointing out is that if I'm sort of drawing charts like this for you, you can anticipate that price is going to run into resistance, maybe at this upper parallel here. So, you know, if your wave count or whatever is, I'm sorry, I'm very dismissive about Elliott wave because I just don't understand it. If you know, if your wave count says this is a likely place for resistance, well, you know, use it in conjunction with these very precise forks. I hope that helps. Leon, I'm just going to go on to somebody else because I've got a whole load of more questions. Try and come back to you a bit later. Okay. Bill says I posted some Goldman Sachs charts. Can we have a look at that? This is into Twitter, isn't it, Bill? Yeah. Okay. Yeah. Here you go. Right, this is Goldman Sachs on a weekly basis, and again, it's just been running quite nicely. I've been watching this in conjunction with what have I got? I've got the banking index here, BXW, if you know that, and just been watching the way that this has been moving. This is a huge fault going back to 1997, the early, the 2007, 2008, all the mess that we had with that. And what I was looking at was the way that price just tagged a little high across here back in 2009. All of a sudden we move up and we run into resistance there. Not just there, but also from this red fork that we've got, little internal fork, and it bangs into the red upper parallel. So I was looking at that, and I was looking at Goldman Sachs in relation to that. Goldman Sachs has been working very, very nicely since 2012. You can see these lows very much in the line of the fork, just underneath the lower parallel. We move up. Where do we run up to? Median line. Where do we come back to? The quartile. Okay, the quartile. Move along. Price again just moves up, back to the quartile, back to the. You can see the way it's going. The fact that we found support along the quartile here. You remember I was talking about the median line mirroring. Okay, being the mirror. So the fact that we found quartile support means that we're looking for quartile resistance because it's the same distance away from the median line. So what happened a few weeks back, we go up, we touch the quartile. We had previous resistance there. We touch the quartile. I mean, I don't know how precisely we can get that. I mean, that is, we touched it. I can't say any closer than that to the T, and we fell away. And that was not a surprise to find resistance there. We've fallen very, very sharply down to the median line again. Not surprised. Median line was resistance here. It was resistance here. Didn't really do too much here, but I'm watching what happens now. I'm looking to see if the median line continues as support, 223.40 or so, or if price moves underneath, does the median line in turn become resistance once more? Is that all right? Good, yeah. Pete said Japanese yen. Have you got anything in Japanese yen? Pete, what time frame are you looking at? I'll tell you what I'll do. Let me actually show you, because I was doing some mentoring earlier today, and we were looking at Japanese yen on the daily. Oh yeah, it's empty. Okay, Pete, I'm going to assume you want to look at the daily here. This is daily going back to 2014. I'm not going to go through all the bull about, how do we know this, that, and the other. Just 2 points I want you to note. One is the Trump low, and the other is the high that we got to there. Okay, very, very simply, we take a fork back here, A, B to a high, C to the low there, and I hope all of a sudden it starts to make sense to you. You can see why we get this lower parallel support there, even with the Trump excitement. Okay, we get all that going. Where does price go from 101.15 or so? It goes from 101 up to 118, stops on a dime, and turns back to the downside. Okay, what are we looking at the moment? A number of things. I'm looking firstly at the quartile. You can see the support, the resistance across there, the support there. Then we fall underneath it, find a little bit of resistance there, and we move to the downside. Obviously, I'm sure you can guess that we're looking at sliding parallels across from these lines. We're looking across there. We're looking across there. But also, because we had this move to the downside, I'm also looking at a little bit of a downslope as well. Let me just show you this, and then I'll, excuse me, go to a separate chart. We go A, B, C. Just draw that in for you. What I'm going to do is I'm going to take this daily chart, just go to where I've got it on its own, okay, which is here. Okay, that's the same down chart, just shows it a little bit clearer if we don't have too much else on it. And we were just looking at this. We as soon as we started seeing price moving to the downside, again, I just draw these charts day in, day out. Drew them. I think the first line that I drew was probably this sliding parallel. Saw a bit of support there. So I think I said to the members, if price moves up and we get to about 115, whatever this is, 115.75 or so, just keep a little watch, see if we get a rejection from that line. We did. We moved from 115.75 or whatever it is down to here, 110.07. What are we currently doing? We're currently looking to see if the sliding parallel is going to provide continued support. What we may have though, and again I don't know this, but we're looking at it, we may have resistance at the upper parallel there, moving lower to here. That's as high as we've got at the moment. If that is the case, what I'd suggest is that the support that we're anticipating around about 109.75 is likely to give way, because the pressure of resistance is moving, is putting pressure on support, and we're beginning to fall through the line. So if this line gives way, probably the next place I'm going to look is down at the median line, around about the quartile. This is around at 108.27 or so. Okay. Al has said, good God. Al, I'm going to answer your question now. Al is from Australia. Are you in Australia now? You're writing from Australia? Good God. He'd like to know, what do we got? Aussie Kiwi. Let me again just go back to, actually no, I think the weekly's been running really nicely on this. Aussie Kiwi weekly, here we go. Okay, I mean this is a big chart going back to 2003. Just looking at the blue chart initially, and once again I want to stress that I don't mind if price moves out of the main body of the fork. Okay, if we fall beneath the lower parallel, I don't really mind. Okay, so what we've got is we've got the lower parallel of the fork across here. Let me just make that so everyone can see it. There you go. Okay, we've fallen well beneath it. Don't worry about all the bits and pieces. And what happened is we found sliding parallel in the line of the blue fork. What I mean by in the line of the blue fork is if I take a line here, okay, just copy it along the lower parallel, move that down, we've got the line of the fork. Okay, that's the line we're moving in. What happened here, as we've been watching this really for the best part of half a year, is price found a low, we moved up, found a low again, a little bit up, and then more lows. And again, we're getting continued support along here, around about 104 or so. Since then, price has moved to the upside fairly considerably. If we just draw this red fork in a little bit more detail, you can see we quite like the way this has been running. Not only because of the resistance up here, but when price fell, it fell down to the lower parallel. Okay, all the way, very precisely, started moving to the upside again. When it came down this time, it didn't fall as low as the lower parallel. That to us means that maybe price is not quite as weak as it previously was here. Okay, in that it didn't need to go all the way there. Bit of buying came in, support came in, price moved up again. We come back down, and instead of coming back down to this kind of level, we start picking up support at the lower at the median line of the fork, and then stop moving higher. At the moment, what's happened in the last few days is we've pushed through the resistance of the green sliding parallel that we had in 2011 through 2013. Again, we hit it very precisely in 2016 and fell away. We're just beginning to move above that, so I'm looking at shorter time frames just to tell me what's going to happen in the weekly time frame. Okay, in terms of the weekly, again, we're in one of those potential we're one of those potential wedges. You've got the support across here, and you've got resistance at the upper parallel. So you've got resistance running down here, you've got support running across here. I'm looking to see if we do find a little bit of a bounce from around about 107.90 or so. Okay, Al, if that's what you were waiting for, I suggest you go to bed now. What else we got? Oh, G223, that's a really great name. I like that. Must call my firstborn G223. Or G224, since you've already got G223. You're asking me about miners, MUX, MUX, McEwen. Yeah, I know them. Right, the gold and silver. The gold and silver service. Or the metal service. We look at gold and silver, we look at miners, we look at metals across various currencies as well. And I know MUX, there you go, this is one which I've been looking at quite closely. This is McEwen Mining. I mean, McEwen's got a great name in mining. This is the weekly chart that I'm looking at. It is not hugely validated, but if gold and silver are going to move to the upside. If GDX is going to start moving to the upside, then I think this has got an enormous amount of upside to go in it. You can see the size of the fork that I'm looking. All that I'm going on at the moment is the sliding parallel. The fact that we took off from it previously, okay, that is quite a good sign. When we came down, we hit that line exactly. We pushed up again. We didn't move as high. Okay, that makes me slightly nervous. But again, we're finding support along this line. What I would like to see is I would like to see price move to the upside and tag this line up here, around about 464 or something, before maybe coming down, maybe finding a little bit of higher support. And I don't know, you might draw something maybe across there from those highs. Okay, something like that, and then starting to move up again. So what I would like to see is price move from here up to 464, back down to about 389, and then go for double figures or something. No, don't quote me on that. It's just a possibility. Look, I think actually it's quite useful. It's just showing, hey, we're in the early stages of what's potentially a very, very big upside in GDX and the miners. This is potentially a fork which is going to work quite well. Don't know yet. I mean, some of the others are working much better. If you go and look at, for example, what we've got, silver wheaton. Okay, this is a daily chart of silver wheaton. Again, we found support down here, sliding parallel support. Okay, in December we moved up and away from that. When we came back down, not only did we breach this down trend line that people had been looking at, we came back, we back tested it down for sort of 7-8 days, whatever that is. As soon as we start finding this line of support here, we start moving up from it, and that is running quite nicely again. What am I looking at the moment? I'm looking to see if support has moved up from this line that you got here. Okay, seeing if support has moved up to the quartile. That's where I'm looking to see if we find support. It had previous support at the quartile back here, as you can see. In terms of resistance, I'm going to look here at the median line of the fork. You can see we pushed up to that. So I'm looking to see support at around about 2037. I'm looking to see resistance around about 2210. Is that okay, G, if you don't mind me calling you that? No. And Rafet, is that? I hope that's how you pronounce your name, Rafet. My apologies if it isn't. He said you posted into Twitter a long time ago. Coffee, KC. Yes, yeah. I know that. Commodities. So let's go and have a look. What we got there? Hang on. Coffee. Actually, coffee on the weekly. Yeah, I think this is the one that I posted, wasn't it, a little while ago? Yeah, this is just running really, really nicely again. Okay, I mean, coffee has been in a downtrend since 2011. You can see up here. Very, very simply, all we do is just draw the fork in. Again, it's a modified shift. Let me just get rid of that and just show you how we kind of come to it. Again, an ordinary fork, if you draw an ordinary fork to the downside, you go A, B, C like that. You get a bit of action, blah de blah. You almost get to the median line. You come up, you get to the upper parallel, you move above it, get a bit of support, and can't really follow it. What we did is we used a variant known as modified shift, and that worked very nicely indeed. It still uses this A. All it does is it moves the handle of the pitchfork half the way between there and there, and immediately we get that. Immediately what happens is we start framing what's going on. You can see that the median line didn't work particularly well itself, but we had a sliding parallel underneath it, we had a sliding parallel above it, and again what I just point out here is, okay, it's a little bit wispy. Okay, resistance. We move above it, we come back down, find support there, not perfect, I appreciate, and we start moving to the upside. Where do we go to? Upper parallel, and then we start falling away. So what I'm looking at Rafit on the coffee at the moment is just to see if this line, and I just drew a sliding parallel again, all in the same angle, just from that high there, across there, you can see we had a nice strong bar down from it there. The quartile, little bit of resistance, we found support there. we pushed up, and again, all I did was just draw that line. Currently, we're in between the two at the moment. What I would look at was to see if we find resistance around about 148 or so, a little bit above that maybe, 148 to 150. To the downside, I'd be looking at about 120, what is that, 128? Yeah, 126 to 128. And I'm looking to see what happens in this channel that we're currently in. Right, guys, as you could probably hear, my throat is definitely on not doing so well. Apologize for that. I'm a little bit croaky. I've been going on for the best part of an hour. So what I'm going to do is draw to a close there, if that's all right. My apologies. There are some more questions out there. If you want to email them to me, I'm more than happy to try and answer. And as I say, look, if you want to try the service, you're more than welcome to. As I say, it's $50 for the first month. If you're not happy within the first couple of weeks, I'm very happy to give you the money back without any problem. What I will do is I'll send you an email in a while. It's going to have a link to the recording of this webinar, so you can just go back over things if you need to. It'll also just have a link on there to the site and also to the special offer if you do indeed want to sign up. Thank you very much indeed. I hope this has been interesting and helpful, and obviously I'd appreciate any sort of feedback whatsoever. Great. Well, thank you very much for being with me.